welcome to Investing for Freedom channel, and I'm Joanne. Good investment process starts by identifying an asset and valuing the asset. Today, let's talk about why we should care less about price while care more about the value. Valuation is a critical part of investing, but the truth is nobody can make the accurate valuation of an asset. If that's the case, then why should we even bother with valuation? The main reason is to avoid buying an asset at a ridiculous price. That's it. We want to buy a good asset at a low price possible to increase our investment return. But avoiding the bad investment is actually more important. Just by avoiding the ridiculous price would dramatically reduce the chance of investment failure. Second reason why we need to value the asset is to estimate the investment return to help us decide whether to do this investment or not. By valuing the asset, we can draw the trend line of the value of the asset. With that, we can estimate the cash flow when we sell the asset so that we can calculate the return of the investment, and it'll help us to figure out whether this is a go-for investment, although it wouldn't be 100% accurate. We have to try to figure out the total return of the investment by valuing the asset so that we can make the investment decision. Let's start with an easy question. How much is the value of an Apple stock? You probably have guessed somewhere around $50 US, which is the current price of the stock. But the trick here is, I asked for the value, and many of us answer the question with the price. Value is not a price, but we often confuse value with the price because we use the same metrics to measure the value and price to compare with one another. To distinguish value from price, think about the dam and the water storage behind the dam. When we stand in front of the dam, we can try to estimate the height of the dam, and that's the price of the asset. But the real value of the dam will be coming from the value of the water behind the dam. So the value of an asset is the volume of the water stored behind the dam. People standing in front of the dam will try to figure out the height of the dam in many ways. Someone will try to figure out with their fingers, while somebody else may try to figure out with the trees around them. All these attempts make up the price in the market, which is not very accurate. Also, we usually measure the height of the dam by meters or feet. But what would happen if the length of a meter or feet changes? We usually talk about price in terms of currencies such as Korean won or US dollars. But the value of the currencies are not fixed, and they will decline in longer term as central banks will print more money. Price of an asset is measured inaccurately and measured by changing metrics. Warren Buffett described Mr. Market as emotionally unstable. Price is offered by his mood swings. But the reality is that there are too many investors that are focusing on guessing the price of the assets. I think it's better to focus on estimating the volume of the water in the storage dam, rather than just focusing on the height of the dam. Now we can talk about the value. Value is consisted of various levels. If we were to value a restaurant business, then how much money is the restaurant making would be the most critical question. How many customers are coming to spend their time and money in the restaurant? The more customers who spend their time and money, and those who post their great comment about the restaurant in their Instagram, the higher the value we will see in the restaurant business. Those customers who just start to take a little bit of interest in the restaurant, it represents the value of interest. Those who start to believe the restaurant is worth a visit represent value of trust. Those who plans to visit the restaurant in near future represents the value of desire. And those who visit the restaurant and actually spend money and time represents the intrinsic value of the asset. All these various levels of value comprise the total value of the restaurant. If you were to invest in the restaurant, which level of value would you consider the most? The density of the value would be greater with 10 customers who spend their money and time than 100 customers who show little interest and pass by, hoping to visit someday. Intrinsic value have the highest density in value. Some may argue Bitcoin does not carry any intrinsic value. Warren Buffett said intrinsic value is the discounted value of the cash flow that can be taken out of a business during its remaining life. If we spend time and money in an asset, then that will become cash flow of the asset from the other side. That's why I defined intrinsic value as value of money and time spent. In that case, Even though Bitcoin does not have the evident cash flow, there are humongous amount of time and money spent on Bitcoin, which I think represent the intrinsic value of Bitcoin. What about stocks? Growth stocks are generally the stocks that are likely to grow with high-tech innovations. Because investors tend to have higher expectations than the actual value of time and money spent on their product or company, value of interest is usually greater than the intrinsic value for these stocks. But value of interest can change very quickly. So in good days like 2021, value of interest surged as the price of growth stocks went up. But what happened in 2022? That's why we need to be more cautious with the value of interest. When measuring the value of an asset, where should we draw the line? Which level of value should we focus on? I recommend focusing on intrinsic value to make more conservative investment. That's why I stay away from the assets that are highly praised by the press, because the value of interest would have gone up and the price will also likely have gone up. So the price will likely to be higher than its actual intrinsic value. Today we discussed on why we need to care less about price and focus more on value. Value is comprised of many levels, and we should focus on the intrinsic value for more conservative investing. That's it for today. Thank you.